When we see a video or a film from a different angle, we get to see a lot more or different possibilities. We get to see a lot more in details. Small, minute moments that reveal a lot of different things which upfront is not visible in the naked eye. Looking at the stock market from the front would reveal you something in those lines. But does it reveal everything to you? Do you believe that if you have a different view of the stock market from a different angle, from a different camera, from a different lens, would you see something different? Do you believe looking at the stock market from a different angle, from a different lens, would reveal something different? Do we always believe the investment plan or the trading plan that we have, the strategy that we have developed for the market, is it really the perfect strategy? Is it really the perfect trading plan? Is it really the perfect investment option for us? Or does it have a different picture? Does it have a different picture from a different angle? So if it does, should we always stick to the trading plan and the investment plan that we have with us? Hang on, you're about to discover a whole load of things which will pinch you to look for possibilities in the market. So like and subscribe this channel right away so this video can reach a lot of people. Winning traders are flexible. When you look at a trade from a different angle and you're not afraid to explore every other possibilities, you will find yourself taking different decisions in the market. It's true, if you take different decisions, sometimes you will make a mistake, sometimes it will fall in the right place. But when you make a mistake, that's fine. Winning traders know that. They know they are going to make a mistake. They know it is a part and parcel of the market strategy. They know it's a part and parcel of the everyday game that they are on. They know they are expected to make that mistake. Well, on the flip side, if you are a rigid player in the market, you may have to pay a price for being so rigid. You may have to pay a price of losing money in the market. So try and be flexible as much as you can so that you can bend, but you do not break. See, the statements might sound contradictory. You might find me saying that when a set trading plan or when a set strategy is working for you, stick with it. But that does not mean you do not be flexible. You're not flexible. And that's where fear plays a very, very important part. It is the biggest stumbling block in the stock market. The biggest stumbling block that prevents you from taking a step aside and looking at a trading plan or an investing plan from a different angle. Just imagine when you're afraid in your real life, when you have an eerie feeling of something is going wrong, something wrong is about to happen with you. How do you react to that situation? We sense this fear and adapt our movement and mobilize our resources towards the source of this fear. We do the same in the stock market. We do the same in the stock market as we experience fear, as we plan, monitor, or execute a trade. When we unconsciously become conscious about something that went wrong or something that was missed, what we do is we focus on the harmful agent. We focus all our energy on the opponent that is threatening us and fight it till the end, until we defeat the enemy or we run away altogether from the market. Either we fight and defeat the enemy or we run away altogether from the market. You see what we are doing? We are focusing on the wrong thing. We are focusing on the problem. We are focusing on the source of fear. We are focusing on the source of terror that is preventing us from taking an innovative decision, a different way of looking into perspective. That is the culprit here. We restrict ourselves and focus on something rather than considering other options. We become rigid. And when you become rigid, you secretly develop a plan, or you secretly develop a feeling that your plan might not be successful. Your strategy might not be successful. The steps that you have thought of executing in the market might not be successful. And then when that happens, instead of considering all possible and adverse conditions, a fearful trader considers only one opportunity, only one option, and does not look for other possibilities. He does not develop an alternate plan of action should he meet or face an adverse situation. We restrict our attention and start considering one option at a time. Something like selling off a very good stock very early, or maybe holding on to a losing trade for a very, very long period of time. Fear moves you into undisciplined trading. It strikes us and makes us paralyzed altogether. I have a video on this. I'll try and give it in the I button. Please do have a look at it. Now let's take an example. Say you anticipated a stock movement this week, but also at the same time, you have a secret fear within you whether this movement will successfully close or not. Now, out of this fear, you might not consider other possibilities like events like change in market sentiments, maybe rate hikes, earnings reports of companies, etc., and so on. On the other hand, if you are a flexible trader, if you become flexible, you become open to exploring all these opportunities, all these possibilities. You will then look for options. You will then look for possible options. What could be the next outcome if this is the problem? You start taking into consideration the effects of these events should they come into picture. This openness actually allows you to change your plan and recover yourself from any potential loss that you might occur. So it runs in a loop. When you are afraid, you become rigid. When you become rigid, you forget looking at other possibilities. So the best answer to this solution is to reduce your rigidity. And to do that, you have to reduce your fear. You have to reduce the fear in the market. Reduce it to an extent that it would allow you to be relaxed emotionally. This in turn will open your mind for fresh or new viewpoints in the market. It'll help you see a situation from a different angle, from a different lens. Reduce the fear to an extent that it'll allow you to manage risk properly. If you can manage that, if you can manage risk properly, when you know that you can survive the worst possible calamity, you will automatically be relaxed. You'll not take a decision in haste. Reduce your fear to an extent that it allows you to remain calm even if you're losing money in the market. That is a very, very difficult task, but yes, it can be possible. We discussed on putting in small amount of trades, amounts which you should always consider that it's lost before you put in the market. So when you know that your amount is already lost, there is no fear of losing money. And when this happens, and when you fear less about losing your money, your mind is relaxed more. And when your mind is relaxed more, your eyes are open to new and different possibilities. You start analyzing different and alternate factors that can damage your trade. Reduce your fear to an extent that your mind is completely relaxed to an extent that it will help you take profitable trades consistently. That's all for today. Hope you liked it. See you again in the next video. Till then, SC signing off. Goodbye.